The S&P 500 spiked again to all-time highs, and now the real question is, will we stop at 614, 615, or heck, maybe even 618? Let's figure this out together in today's market review. This is the SPY daily chart, and as you can see, the past 3 days we've just been running up. So on Monday we had an all-time high at about 610, and Tuesday we had an all-time high at about 611, and on Wednesday we had an all-time high at 613.23 at the moment. So the question becomes, are we just going to keep going up permanently and you can all just make easy money? Or where the heck are we going? Where's the stopping point at? So market context as a whole, you can see initially we were in a bit of a downward trend, which was interesting, with the high, the lower high, the lower high, with the low, a lower low, but we didn't have the lower low over here as a whole, and that was canceled out because we actually had a higher low with this core piece here. Showing that we're back on an upward trend, hence also the breakout that specifically happened as well up here. So as far as where the heck are we going, you have to keep in mind, since things typically do kind of boomerang like this, essentially, it has to, at a certain point, go up somewhere and then come down, again, pretty massively, to at least back to this red zone, more than likely, and then bounce back upward. You can make an argument that this is essentially already is the bounce, but it still has to, for it to continue doing a trend of going higher and higher and higher, we need to have another higher, supposed to be another H, a higher high soon, right? Because this is the only past previous high, so we need a new higher high, double H, to continue the trend over there, and we'll get something like this as a best case scenario, some sideways action, and then keep going up and so on. So that's kind of what we're looking for. I mean, because of course things can go like this forever, but the odds of it happening is potentially not. But the odds of you being able to make money here from buy and then sell and then buy and then sell and then buy here and then sell here, do nothing here, but maybe make some money on the sideways piece here, fine, and then buy here and then sell here, is much more probable, and it makes much more sense because not everything is a perfect run up. And realistically, if it was that easy, everyone would do it. So let's look at some data that would give us evidence to say where the heck are we going and how high can we go before a pullback. So keep in mind, at the moment we've had 2 green days after this red zone, specifically at the 610.83, that have happened. So in order to know where the heck we're going, let's compare the last times where we actually had all-time highs and after a breakout occurred. So specifically, back here at 826 was when there was an all-time high, and then it broke out up over here. Then the same thing happened over here at about this 930 area, and then it broke out over here. And then, of course, based off of this area, there was, boom, a new all-time high, and then it broke out in this specific area. So let's actually count how many days green afterwards, or just upward afterwards, happened, so that we can know, okay, hey, we've had 2 green days at the moment. Where exactly are we going? So let's go ahead and put a 2 here just as a reference. So over here, starting on the left-hand side, we had the first time where it broke to a new all-time high. So we'll count that as the 1. This guy doesn't count because it pulled back, but we have 1 day here, 2, 3, 4, 5. This doesn't count. And then 6 days specifically of it going in an upward direction and or sideways. And then, of course, they fell over here. So this is 6 days, which would be great for just this reference, because if we're only at 2 at the moment and we could potentially go up 6, hey, we have 4 easy green days where it can go up, hypothetically. And so next we have this area over here. After it broke above, we have 1 day of green, 2, 3, 4, and then it went sideways here. So we'll count this as 4, which is still dramatically higher, 50% higher, 100% higher than the 2, technically. It's double the amount, so maybe we have 2 days left. And now let's check the last day over here. Last time it was at an all-time high. We had 1 day over here, 2, 3, and this is 4. It was red, but it's higher than the previous green candle. So we had 4 days here, which again, higher than that 2, which begs the question of maybe we do have 2 days left in the gears for us to potentially go up higher. Which, if I go back to this chart, if we went from, on the past 2 days specifically, about 611 to 613, so let's say 611 to 613 specifically, and if we have 2 more candles to go, then wouldn't that potentially mean we would maybe go from 613 to potentially 615 at a minimum if we did continue going up, because these candles aren't, at the moment anyway, they're not these huge giant candles with a lot of volatility. They're going up $10 or so. Maybe it's just these little small candles before it gets up in this area, does the bigger pullback, and then boom, we just rocket on off, which we can still make money on the current uptrend and this pullback here before it does the uptrend currently again. So at the moment, it's just from that very basic logic, I'm looking at 615. Will it get to it? Potentially. Will it not get to it? I don't know. It doesn't matter. But we can still make money regardless, based off the logic of, hey, this is maybe where we're gonna go based off of just the 3 past data points of when there were all-time highs. Now back on the daily chart of where we currently are, let's look at a little bit of price analysis on the candles, the bodies, the wicks, and so on. So for the most part, you can see for these past couple of days, of course, the buyers were winning. But as you can see, I want you to notice how badly the sellers were actually losing as a whole, because this is a very important candle here. Regardless of the name, I don't care about the name. I care about how it looks with the big body on top and this long wick downward. It basically means that the sellers tried their darndest to push it down from 611 to 608, and that was early morning, massively failed, and it just ran back up. Same thing with this over here. It did come back down to about 609, give or take. But then, as you can see, it went back up pretty massively again. And then this was the best attempt that the sellers could actually manage to pull up. And it basically was dang near a doji to a certain degree, because it didn't really move anywhere. It went up and then went down. But then it stayed right here at about the 610 area, where it basically opened, and it also closed at the same spot. So from a candle body wick perspective, the sellers are weak. There's literally at the moment no exact leverage that the sellers have at this point in time, because the buyers are massively in control. And I mean, the part of the reason of that as well is, of course, is that there was the all-time high, and then there was the lower low and the other lower low. So the sellers made a bunch of money here. The sellers made a bunch of money here, and then they didn't have the steam to go down here, as mentioned, for a lower low, since that failed. And then the buyers stepped in, because there's more buyers than sellers, typically, at least for the S&P 500, FY, hence why it always goes up over a 20 plus year period statistically. So the buyers finally won again, because the buyers win long term and the sellers win short term. So it is what it is. So let's briefly review the past recent swing trades and the past day trades based off of my specific day trading strategy. So as a whole, with swing trading to start with at first, you'll notice something very interesting, at least for these past 3 days as a whole. I think steam is important, because this big red zone, of course, was that highest point of all time, swing trading wise. And you can see it tried to, at the point over here, to a couple weeks ago, hit into this area, but then of course fell down. Tried to hit into this area, but then it fell down. And that's essentially when the seller, lost steam. And then of course the breakout happened over here a couple days later. So it looks as though, when you look at it from this POV, that it just went sideways here and a slow breakout to the top. But that's not exactly what happened. Sometimes when you're swing trading, you might have to look at more data on that specific day for you to get a better picture. And as a FY, this is the 1 hour chart. So looking at the 1 hour chart still, if we zoom in here, this in the black specific spots is the current intraday of what actually happens during market hours. The gray is pre-market and post-market once the market closes. So they kind of secretly, if you want to call it secretly, we're doing a lot of things, interestingly enough, in the pre and post-market area. So if we actually draw these little lines here, you'll notice the little trend that in the aftermarket and pre-market, it was actually on the hourly chart specifically trending upward. Versus if you look at this spot here, it just looks sideways for the most part, right? So we had a low here, in case you can't see it, a high, a higher low, and then these pieces were basically equal highs, but they were a little higher than the previous one over here. And oops, sorry about that, forgot to count this guy as well. A higher low and a higher high, which is further proof that we're trending upward, right? So for the most part, swing trading wise, if you bought specifically here in the open, FY, like I did, but I'll talk about that in tomorrow's video for Friday specifically, and you sold up here, you would have made a bunch of money. If you would have potentially bought down here as well, you would have also had a good entry for your buy spot. That would have been great. And this would have made sense. I know you're looking at like, oh, there's no way you would know that, and da 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 da. You would. I mean, it's very clear. Once you have, let me delete this and redraw it. Once you have this data point, and then this data point, once you have just that, and then you see it gets to here and it can't truly break down and stay above that, and maybe you got to this specific spot, then you can identify very quickly, oh, wait a second. On this chart specifically, it's trending upward. I could potentially buy. So you could have 100% bought there. I mean, we already know, the market's on an uptrend based off of the daily chart we talked about. So if we pull back down to the hourly chart, it's cool. We can take that. I didn't take this trade over here. I was too focused on, for being honest, not looking at pre and post market because I never really do. But I was looking at this saying this is very, very suspicious. And I'll talk more about that later because I'm like, I know it's on an uptrend. How are you possibly going sideways? And it's only going sideways because it had this hidden data here. So you could have did that. But again, you get the higher area here and went higher over here. So not trying to say what's 100% going to happen, but I may be crazy. It may. I mean, you can already see post markets already putting back down. Looks like it might go back down to about the 610.50 area and then run back up maybe to 614 tomorrow or Monday or something like that. It's a big possibility if the trend continues, of course, right? It doesn't have to continue, but that's what it's basically saying at the moment. But that's swing trading for the past couple of days. Now, day trading, with my specific day trading strategy, I want you to keep in mind, of course, always the big picture, but pull things back so you can see. So one, you can see that full picture, but two, you can still do my day trading strategy, which is separate than the swing trading strategy. So if we go to, what day was this? I want you to keep this in mind here, 610.94. 610.94, let's clear this guy out, erase this, is in this specific spot. And right here, very small, but you can see it broke to all-time highs. So in my mind, especially as a day trader, not a swing trader, but as a day trader, I look at that and say, there's definitely going to be some friction on this level because it's the most important level because everyone can see it. It's the highest point of all time. Even people that don't know how to trade, they'll see it, right? So there has to be plays off of it. So if we go back to this specific spot, you'll notice, and this is the 5-minute chart for SPY specifically, that if you drew the 5-minute zone here with 610.94 minus the 10 cents as discussed in my day trading strategy, it tapped it, boom, here, and then nothing here, got relatively close, but then boom, it tapped it here again. This is a multi-day zone at that specific time. And then boom, it tapped it again here, and then finally broke above it. There was 3 day trades specifically on this area. And you may be looking at it, well, how do you get enter into it, or so on and so forth? Well, here's a very clear depiction of it, of course, right? We had the zone candle, well, excuse me, one of these, doesn't really matter. The zone candle because it tapped it here. Reversal candle for the red one. Confirmation candle because it's lower than the reversal candle. And then the entry specifically right here on that little specific spot about 610.68 or so. And you can see it ran down. I'm going to talk about this trade in tomorrow's video because I also took this trade as well. So it's not just BS. This thing happens all the time. And I wanted to take this trade because as you can see very clearly over here, this is that next day that it got hit. It hit it and ran down. So I was thinking, like, if we go back to it, right? Logic perspective. If the multi-day zone was up here, and this is the highest point of all time, then if it hit it once and it hit it twice, my brain, my basic monkey brain here was like, okay, if it hits it a third time, it should fall because patterns repeat. So that's literally the entire logic premise behind majority of my trades here. Like, think about it again, even with this piece here, like the hardest part about this, especially including the pre-market and post-market, is just including the pre-market and post-market. The easiest part is, okay, when it goes down and it hits a low, but it's higher than the previous low, it looks like it's still going. If that makes sense. And then I make some money. So overall, that's the little quick review on a couple of the day and swing trades that essentially just happened. But Next, let's actually cover the analysis more detailed of the trades I took this coming Friday. So I'll see you there.